Vikas will do the first section and then I'll do.
Okay. สวัสดีตอนเช้าครับ Hello everybody. Thank you very much for coming to Set Opportunity Day to hear our second quarter results. I think you all know Mr. DK Agarwal, who is the CEO of the pet and feedstock business, and Mr. Vikash Jalan, who is in IR. So we'll start. I think Mr. Jalan will kick us off, and then Mr. Agarwal will follow on with some information after that. If you have any questions, please keep them for the end, and we'll be very happy to answer all of them. Thank you. So, Mr. Jalan, please.
Thank you, Richard. Next. We like to start with our redefined vision statement, which we have just launched last month across the world at our different locations. So the changes that you will see in our vision statement is that we are now saying we want to be a world-class chemical company making great products for society. So the changes from the last time is our last vision statement used to say that we want to be a leading global producer, which we believe we are already a leading producer in the businesses where we operate, and we have redefined it to be a world-class chemical company. And then our mission statement, we are responsible industry leader, and we carry certain values. So I will not go into much detail. It's on our website. And second quarter results, the headlines for second quarter, you'll see that there's a 28% year-on-year increase on production to 2.3 million ton. Last quarter, you know that we had EOEG shutdown, so for one quarter we had the production from MEG business, EO business was missing, and so which has come back partially, ramping up. And then we had two big acquisitions which got completed in the second quarter. BP Decatur, which we are calling as aromatic Decatur, which added 1 million ton in capacity, and Cepsa Spain, which we are calling as Ivl Spain, which added 720,000 tons of new capacity. So total we have added 1.7 million ton, and second quarter saw the full quarter impact of these two acquisitions. BP Decatur we saw the full quarter, and Cepsa Spain we saw for about net of 7 days. So which has added a lot of production, and you will see a big jump from quarter one to quarter two. 2.3 million ton achieved in the second quarter. 1.7 million ton we have added, as I said. Core EBITDA went up 33% year-on-year and achieved 7.7 billion baht. When we go forward, we'll show you that how much has come from the new acquisitions and how much have come from the legacy business or on a same store concept, like what assets we had in Q1 and the same assets, how they have contributed in second quarter. Net profit, it is a record net profit, 2.9 billion baht, 75% growth year-on-year, and the core EPS followed the net profit at 56 satang this quarter. Going forward, if you look at the same matrices in the next slide, which is last 12 months information, is always we recommend to look at our business on an annualized basis, like on the last 12-month basis. So there's a production of 7.7 million ton, which is a growth of 16%. We completed 8 M&As since January 2015, as we announced to you that in our Capital Day last year, that we are adding these projects, and we have completed what we said, and in total we have added 3.4 million tons. Most of our M&As that we have announced have completed. There are one JV which we announced in India. Mr. Agarwal will talk more about it, which is ongoing and is expected to complete in the second half of this year. Core EBITDA followed the production and some increase in margins, growth to 24 billion baht, 19% growth year-on-year, and core profit 7.8 billion baht, a growth of 61%, and core EPS followed the net profit. Just to clarify here, we are using the term core, and in our MD&A presentations, fact sheets, you will see the term core, which is different from the reported numbers because we normalize all the inventories, gains or losses, or any one-off extraordinary items which are there, and we normalize all that and show you the core numbers. This is the one that we were talking, that we want to show you the same store concept, that how the business has performed on the same assets that we had in Q1. And then last year we had most of the assets, but okay, like after that some assets have been added. Like second quarter 15, you will see that the EBITDA per ton, if you see the quality of earnings, was 3,200 baht, if you see at the bottom, in the second quarter last year. On the same basis, excluding the BP and SEPSA business, the core EBITDA per ton has grown in second quarter 16 to 3,400 baht. Operating rates are a little bit lower, from 90% to 87%, which is mainly due to EO business, which was running full in the second quarter last year. And in second quarter this year, it is ramping up because we had a big catalyst change, and then there was some mechanical problem which got resolved, and now it's ramping up. So on the same store basis, you will see that the EBITDA have grown from 5.8 billion baht to 6.7 billion baht, and 1 billion baht has come from these two companies that we bought, BP Decatur and IVL Spain, which added 1 billion baht of core EBITDA. So adding together to 7.7 billion baht in second quarter compared to 5.8 billion baht in the same quarter last year. EBITDA margins have grown to double digit from 9.4%, and all the returns ratios, like whether return on equity or return on invested capital or return on capital employed, they have grown on the like-to-like basis also, and with the M&As they have grown even further. Not only this, we expect certain synergies to come in 2017. You will see that the businesses that we bought, 1.7 million ton from Aromatics Decatur and IVL Spain, it's the first quarter which has come in, and we expect a lot of synergies to be extracted, some cost savings. We'll see there are opportunities, hidden factories out there. So the next 12 months, the focus will be to extract synergies from these businesses. This slide is just a profile of second quarter because we thought it's important to show that how the business has changed, because we added a lot of capacity in first quarter, end of first quarter, second quarter, beginning. So you will see that the higher contribution from HVA, our high value added businesses, and special position businesses. Special position is we define as our necessities business in the Western markets. Which is important because in the Western markets like North America and Europe, these are the geographies which are pretty disciplined markets. Like we don't see a big fragmentation like we see in Asia, like a lot of Chinese, Indian, the Koreans, this kind of competition. We don't see in a big way. There is a healthy few players and a very disciplined market. So that's why we put it as a special position. And IVL is also integrated strategically in these geographies, which also put us in special position. So today the biggest strength of IVL is having a portfolio which is diversified into special position and HVA, and also we have some necessities in Asia which is improving as we see in the next few slides. So year on year, second quarter, you will see that the growth has come not only from the new businesses, but also PET business have grown in volume, and also it has come in terms of EBITDA per ton. The quality of earning has also gone up. $69 per ton has gone to $86 per ton. So this has also come because of two things. The one is the mix has changed, like we have added SEPSA Spain, which has added some more PET in the European market, which normally have a better margin than Asia. So some change in the mix, and also a little bit margins are better, and costs have come down because we have been telling you that the energy prices are coming down over the last 1 year or so. So we have seen some impact. So industry margins maybe have gone up maybe few dollars, but our EBITDA per ton has gone up because of change in the mix. Operating rate has gone up. So when the operating rate goes up, our fixed cost per ton goes down, and also the change in the mix. So that has led to the increase in the quality of earnings. The fiber business, definitely it has grown with the acquisitions, Performance Fibers, and other businesses. This is the first time we are showing like this the comparisons for the last few years on the return on capital or return on equity, and you will see that in the second quarter we achieved 15%, 15.4% return on equity, ROCE, core ROCE of 11.1%, and ROIC of 9.7%. The whole point here is the trend, like from 2012 weakness, we have seen that after the 10 and 11, with the peak of the margins, there was a decline in the margins in the industry, and in the last few years we have seen that the margins are weakening, but IVL have been able to improve the performance on various matrices because of our strategic steps that we have taken, expanded HVA and special positions, and relentless focus of the management on the operational excellence, so which has started to work, and you will see that in the second quarter we have achieved healthy ratios on that, and on top of that we expect more synergies to come next year and this year. This is just a tally because we have been, all the slides so far was on the core basis or normalized basis, as you understand. So this tells you that how all this tie up to our reported financials, and you can see that the core net profit after tax and non-controlling interest was 2.9 billion, as I said before. There was an inventory gain of 700 million baht, and there was a tax impact on that, which we calculated notionally, 131 million baht, leading to a net profit before extraordinary 3.5 billion baht. And then there was some extraordinary income net of expenses. So we had to do the fair value of our IVL Spain assets, so there was a gain on bargain purchase on that. We took accounting impairment of our Turkish PET asset to be proactive due to below the performance is really softer there, so we proactively did that. We took certain impairments of our deferred tax assets in Thailand in the PTA business, and there were some marginal other items. And then the net profit after tax was 5.9 billion baht, including all the extraordinary income. We just like to remind you about our Abu Dhabi investment that we said last year that we are exiting that investment because of various strategic reasons. And last year we booked certain expenses when we exited that business. And we are very happy to inform you that under the agreements there were certain expenses that we were able to recover, and we have recovered 400 million baht from that we write off last year. So that income will be booked in the third quarter, and we'll show that as extraordinary income. Going into our balance sheet, you will see that we have a strong financial framework, and we are balancing the value and the risk, which you can see on this slide. Our net operating debt remains at 88 billion baht, and our total equity remains at 89 billion baht, giving us a net operating debt to equity around 1 time. Our net operating debt per ton has come down. 2012 in the second quarter it has come down to $235 per ton, and then in 2018 plan we expect it to go down to $150 per ton. So this reflects our discipline in terms of growth. We are known as a growth company, and we have bought 8 assets, as I said before, in the last 1 year. But this ratio, the operating debt per ton, will show that our growth has been disciplined. Of course, in second quarter you will see there is a PERP which is included as equity, but even though the growth has been disciplined. Capex spending, you can see that in the first half we have spent 29 billion baht, which is mainly on 2 big acquisitions we have done, Aromatic Decatur and IVL Spain, and some debottlenecking capex going on, Rotterdam expansion, gas cracker, which we bought last year, so it's under refurbishing, so we spent some capex on that. And so capex will come down based on the plan that we have today. And we expect positive free cash flow in 2016 to 2018 overall. So 16 to 18 capex spending 43 billion baht, 15 billion baht and 7 billion baht. And we expect our operating cash flows to be higher than that. And then it will translate into a better net debt to equity. 2016 we expect to remain at 1.1 times net operating debt to equity, and then it comes down in 17 and 18. And as you know that we have two warrants out there in the market, warrant 1 with a strike price of 36 baht and warrant 2 with a strike price of 43 baht. And if they get exercised fully, then our net operating debt to equity will be further lower, and which will give us adequate headroom for the future growth that we will announce in the coming quarters next year. This is the last slide before I hand over to Mr. Agarwal to give you a business update. It's a strong financial profile. Many is a natural hedge. We have been always telling you that we operate in a natural hedge environment. Like our assets in US dollar and euro, they match with the liabilities and debt in the same currency. There could be a mismatch of few percent, but it's mostly natural hedge. And you can see on the right hand side the maturity profile of debentures and long-term debts. So debentures are due for repayment this year, which is shown in the orange color bar in 2016-17, which is about 9%. And as you know that interest rates have come down, so if we refinance these debentures, we expect it to be getting a better coupon than we are paying today. So with that, I give it to Mr. Agarwal.
Good afternoon. Let's understand what is business update and IVL. Today, IVL is the largest producer of PET in the world with 20% market share after we are consolidating the Indian market. The joint venture which is being signed with Dhanshri has already been actually agreed, 50-50 joint venture. That will add the capacity to 4.6 million tons, means every 1 out of 5 bottle in the world is made by IVL. And this is not small. This is a very significant position with 33% market share in North America and in excess of 40% in Europe. So this is a unique position. We sell directly, not through many agents. So this is a big value. The other important business which we developed is HVA, the hygiene, where 1 out of 2 premium baby diapers are made from our fibers. So this is another leading position in HVA, and the airbags, 1 out of 4. So whatever IVL does is a leading position in the respective field, whether it is Thailand or it is Europe or US. So we are the largest producer of PET globally. There are 2 HVA products which has been added in the recent acquisition in Cepsa, Spain, as well as in the Decatur. We are the largest producer of NDC. We are the only producer of NDC. NDC goes for specialty films and other applications, and IPA. We are the second largest. I don't know whether you followed the press announcement about 70,000 tons new metaxylene which we have tied up, which will actually increase this business post 2018, being the only producer in Europe, and our capacity of metaxylene, where right now we are getting about 60,000 tons, it will increase to 130,000 tons. So this is a very high value added product, and which is also reflected into the financial results which you saw, which we shall explain to you. What is the polyester growth? Polyester is a common man fiber PET, replacing PVC, glass, fiber replacing cotton. This is a common main, and as you can see, the 22 million ton business has translated into 55 million tons over last from 2000 to 2015. And it will continue to grow. There is no threat to this business. There is no substitution of PET. There is no substitution of polyester fiber. As you know, the woven wear mostly is polyester. So as it gets finer and finer, there is a lot of innovation going into the polyester, and this will continue to grow. And the drivers of growth, of course, population in the world. If population by 2050 becomes 9 billion or more, and middle income like 3 billion, now they have a lot of spending power in terms of, you want to be careful about what you drink, what you wear, and that adds up to the polyester consumption. 60% of the world will live in the urban areas. This means more furnishing required. The standard of living increases, more polyester non-woven demand. So this business is not a sunset industry, it's a sunrise industry. As you can see, how this has been growing rapidly for last so many years. Today, there is an interesting development which is happening in the world, is the cotton shortage. Cotton prices have gone up to 74 cents a pound, and cotton crop in India is not that great. And if this happens, naturally, the polyester growth will be higher because polyester substitutes cotton. And this will be another driver of the growth. So it's a very promising business. This is the IVL footprint, what changed from 2011 to 2018. Now, all these capacities are committed. As you know, what we showed you the second quarter, acquisition of Decatur assets and Cepsa Spain. There are three projects basically. One is the cracker, which is going to start in fourth quarter of 17. There is a Dhanshri joint venture. So all these footprints are all firm commitments, where our raw material integration will go up from 31 to 56%. This means you are capturing more value chain in the entire, say, ethane to PET. Like in North America, we are integrated right from ethane to PET, as well as in paraxylene to PET. So the level of integration goes up from 31 to 56%. Number of sites have gone up from 28 to 65. It's easy to acquire, but very difficult to culturally integrate. The last two acquisitions has been very well integrated, as you can see the financial results of them. The HVA strategy of group has worked very well with a diversified product base. 12% of the EBITDA percentage has gone up to 40%, and the EBITDA margin has gone up into the two-digit from 9.1 to 12%. If you look at the footprint, which has significantly changed from 2011, PET, which was 53%, has gone up to 38% with the largest position in the world. PTA Asia, which is a laggard because very poor margins at present, still no improvement, is 11%. PTA Europe is about 9 and 13% is North America. We have recently initiated an anti-dumping action against import of PTA in Europe. Now, if this is successful from Korea, this will help to improve the margin. As you saw in the PET, we saw an improvement in the situation in North America with anti-dumping duties against China, Oman, India, and Canada. There is a footprint as MEG, purified EO, which is an HVA product. We have the 42% market share in the North America, fiber necessities, and then you see the IPA and DC. So what does it mean, the footprint changing, is the diversity of earning. You're not exposed to a particular chain, like if you're exposed to refinery or if you're exposed to olefin. So there is a good blend of HVA and the necessities and the special position. The special position product line, what we talk about, is basically the Western feedstock and the Western position in where there's a disciplined market in the US and Europe. There are less number of producers. PET, I don't know whether you tracked DAC recently acquired Selenis, one Canadian plant. So one more producer has gone away from the system. So very consolidated business. Even in PTA, there are less number of players. So that's the protected market where the PTA imports from Asia are not possible because there's a high duties as well as there is a freight is higher. So the IVL has actually transformed over the last 7 years in the terms of capacity growth, which is 11.3 million ton production. This is the chain which to explain you that where we are and how well we are integrated. If you look at the olefin chain, with the cracker startup in 2017 and which is a very exciting product, our capital cost will be nearly 50% of a newly built cracker. Those who are following the crackers, as you know that CPChem, Exxon, Sasol, many crackers are built in the US. But the investment cost of those crackers is about $2,500 per ton of capacity. Our cost of this will be around $1,000. So when you have much lower capital, and the timing will be perfect because even before those crackers start in 18 and 19, this cracker will be up. So this will be an upstream integration of ethylene, which we are presently purchasing from the supplier. So it will get ethane to purified EO, ethane to MEG, and right up to PET. With acquisition of paraxylene asset in Decatur, now we are integrated at the same site. It's a very cost competitive plant. Of course, it is based on mixed xylene, but that integrates us. And if you look at globally, although we don't have assets, but we have competitive supply of paraxylene. How? You know in Thailand, PTTGC, Exxon and Thai Oil are there, the producers, Thai paraxylene. So this comes by pipeline. So we get the benefit of logistic cost, because otherwise they have to ship it out. And paraxylene is going to get long as more capacities are getting built. In particularly, Reliance is building a very large paraxylene plant which will be operated by the end of the year, 2 million tons. So paraxylene in Thailand comes by pipeline. In Europe, we are co-located very close to Exxon, only 20 miles. In Cepsa, Spain, it's co-located with Cepsa refinery. So our paraxylene sourcing is very cost competitive. Similarly, metaxylene is cost competitive because it is just co-located with our refinery. And the new, which we have signed up a long-term agreement of 10 years, is control the metaxylene. And controlling metaxylene means controlling the IPA production. So it's not IPA capacity which drives the margin. Who controls the meta? And there are less number of players in the world in meta, the largest being Lotte, and then we become the second largest, Cepsa, and then we have FCFC. So less number of players who invested in it. And this is a very smart move. And which you saw the IPA results also in the second quarter. We are not in refinery. We don't intend to be in refinery, which is a highly volatile business. So on the other side, we have polypropylene fiber and nylon 6,6 fibers. Now, there are a lot of capacities which are missing. We are still a very large buyer of MEG in the world. We buy about 2 million tons. We produce a very small quantity. But we smartly decided not to invest in MEG for a new, because it would have costed a lot of money. So we are still a big buyer, but these are the opportunities which exist to make that 51% to more and more. It's always a buy or make decision. And we'll continue to look at those opportunities as they arise. This is important. People always think, what is the cycle? I just wanted to explain, in our business there is actually no cycle. It is, the margins has squeezed. As you can see, the bottom red line is the PET margin. Then on the top of it is blue, dark blue, which is the incremental fiber margin over PET. And then the green line is the PTA over MX. Why we have taken MX? Because we are also producing paraxylene. And on the top is the MEG margin over ethane. So if you see over 13 to 16, the lines have compressed. This means because of huge investment in PTA in China, a lot of capacity of PET which came in, and some of them we bought over. You know that we bought over a newly built plant, Polyplex in Turkey. We bought a plant in India, Micropet. Egyptian plant shut down. And so all the new players who came in 2011 because of very good margins actually landed up selling assets to us. So there's no outside China plants getting built. And even China, there is a slowdown of the capacity because it's not at reinvestment level. So these margins are not support a reinvestment. And this means that there is upside of the margin when it will all depend on when the demand and supply matches. So we are not like olefins, where olefin today, is the peak of the margin. When we say the polyethylene or polypropylene margins are fantastic. So this is the status of margin at present, and we don't see any downside of the margin, and which is reflected in the second quarter thing. The other important thing is the integration. In integration, what happens when you are integrated to the site, you don't pay for the transportation, and you also get a lot of synergy benefit of co-location in the terms of maintenance costs, in terms of overall management. So integration is the key. Let's look at how EBITDA per ton has changed. This is IVL necessities. You understand the necessities, basically we are talking of the commodity businesses. The EBITDA per ton from 2013 to second quarter 16, from 2083 went up to 2,400. Except in first quarter 16, where it was 1,700, you know that we had a serious mechanical issue with the catalyst change in EOEG plant and remained shut down for a good period of that quarter. And even in second quarter, we did not get the full benefit because it was running suboptimal. It was running at 80% capacity utilization. So in spite of industry margins dropping, our EBITDA per ton was 2,086. And you can see the capacity went up from 4.7 to production to 7.6 annualized. So this necessitates how we could do this. Important is that how could we beat the market? If the large market share means better capacity utilization, lower cost, continuous operational excellence, enlarging domestic sales, and domestic sales means that you get better pricing. So all these benefits have kept our EBITDA per ton in the necessities, and the PTA margins have still not improved, as you know, that in Asia. But there was a report I was reading from one of the analysts, which is interesting, that a lot of rationalization is happening in the world in the polyester business. In Korea, PTA rationalization is happening. They are operating in lower capacity. China, some plants have shut down. Mitsubishi recently sold their plant in Haldia. So a lot of rationalization happening in the industry, and because it is not at a reinvestment level. HVA strategy has been a very, very unique strategy for us as we implemented in the last 5 years to diversify our product base. We went into hygiene fiber, we went into airbags yarn, we went into tire cord, and look at the EBITDA margin per ton. And recently we added 2 products, which is NDC and IPA. The EBITDA per ton went up from 4,747 to 8,600. As you can see, in first quarter, it was 7,200. Again, because purified EO, as the plant was down, glycol plant, purified EO is a very strong business, which we call it the HVA business, where we have 40% market share. So since the plant was shut down, there was a hit in that particular quarter to drop to 7,200. So there is a continuous focus to expand HVA portfolio. As we said, IPA will increase. We are doing a tire cord expansion, which I will talk in the projects in China, a very cost competitive place. So tire cord is getting expanded. Similarly in PET, also we are expanding our specialties. So this all translates into a EBITDA per ton, and today HVA contributes 40% of the total EBITDA. So there will be all these diversified product line which will be continue to expand. If you look at consolidated EBITDA per ton, as you can see how the blue line shows how the necessities were there, and the red line shows how the consolidated EBITDA improved from 2,579 to 3,300, which is a blend of necessities and HVA. As necessities remained at 2,000 and HVA became 8,600, except for the first quarter when the EOEG was shut down. So this shows you how strong is IVL by having a diversified geographical diversification and product diversification, which includes special positions, Asian necessities, as well as the high value added product line. So this unique blend of HVA necessities have increased the blended EBITDA per ton. Let's look at the production. This gives you just how 2010 to 2015 the necessities and HVA production composition has changed. The top line shows the HVA production in last 12 months, 15, last 12 months, 16, and right hand side shows you the core EBITDA. And you can see that the pie of HVA EBITDA continues to increase, particularly in 2015 and then 2016, which constitutes 40%. So once, what IVL today has, IVL has a large volume, and if there is a improvement in the industry margins and the commodity, it will get translated into the bottom line immediately. So that shows you how the production has been moving. IVL has been following last 5 years a 3-pronged strategy. One is, of course, the geographic diversifications, where we went globally, acquired the assets, and created a very strong position in PET of 20% market share. So all these expansions, all these acquisitions are brownfield, like Invista acquisitions, Bangkok polyester required for elimination of competitor in Thailand, Poland, very state-of-art plant we acquired from SK Korea. China, still, it was very difficult to make money in China, but we are very proud about this asset, which is making a significant return. We acquired this newly built plant in India, Micropet. Now we are consolidating with Dhanchari as a 50-50 joint venture, which is 700,000 tons. and Turkey we acquired the plant from Cholu, from Polyplex. So all these were to serve the customers globally as well as creating a geographical diversification. In the special position, we saw an opportunity that in Western markets are protected. We should go and acquire these assets, and then we acquired this PTA Montreal, which is a unique plant in Canada. Decatur integrated paraxylene. So this was an upstream integration strategy. Ethylene oxide glycol, an acquisition, getting a position in purified EO, and then this new cracker, which will get built up by fourth quarter of next year. So you will be fully integrated. And then the HVA, where there is a barrier to entry. It's important to understand that it's not easy to sell tire cord to go and to an automobile company. It takes 12 to 24 months to approval process. Similarly for the hygiene fiber. So these particular businesses are protected in terms of margin by a barrier of entry. They have a number of patents, innovations. So this three-pronged strategy has grown IVL multidimensional. North America strategy, I think there were some questions and thought that what will happen when MNG builds up the new plant, which is actually right under construction, 1 million ton PET and 1.2 million ton PTA. Well, it's not easy to build the plant. This plant is already running late. The original project cost estimated was $1.1 billion, and it is already running at $1.4 billion. So huge capital investment which MNG is making. So we wanted to understand what is the impact of this on North America business. Actually, we knew about this a long back, and we already factored into it. So out of the 5.2 million, now this first I'm showing you the footprint of IVL in North America. What do we have at present, and how does it impact? So we have 5.2 million ton capacity, 76% in the USA, 13% we have a PET plant in Mexico, and PTA plant in Canada. And you have a good footprint, PET 31%, which is 1.5 million ton. PTA is about 1.6 million tons, which is 31%. Paraxylene is 14%, which is about 700,000 tons. And you have EOEG is 11%, which is 550,000 tons. And then you have specialty fibers. So this is very well integrated. And as you know, North America shale gas advantage are substantial. The ethylene cost in US is pretty low. Even today when present cost is about $550 per ton versus in Asia is much expensive. So this is the footprint of IVL, which is very well integrated. Now let's look at two different business segments, PET and PTA, and how does it make difference of this new project MNG. The consumption of PET in North America is about 4.08 million tons, which includes Canada, US, and it's about 96% is, and the 4% are imports. In the North America, we had this dumping duties against India, China, Oman, and even after that, there were imports coming in because still from Taiwan and Korea, the imports are coming in, which are not exposed to the. So there's about 400,000 tons which comes as imported resin. There are initiation to put again dumping against there. But this plant of 1 million ton, when it comes in, 500,000 ton is a capacity reservation by DAC, the other player. So he paid the money and he controls 500,000 ton. And they got a plant, high legacy assets, cost legacy assets of Cedar Creek, which is about 200,000 tons. So we believe that that will shut down because naturally it is a very high cost. Similarly, MNG has a plant in Apple Grove, 350 KT. He will shut down. So nearly, and one plant in Pearl River, DAC is converting into fiber. So another 150,000 goes away. So we are talking of 700,000 tons of PET capacity getting rationalized or converted into fiber. Because fiber, there is a good demand. So net increase becomes 300,000 tons. Now there is import substitution which will happen and natural growth will come. So the industry capacity utilization, which you can see is 84% or 85%, even after MNG's plant will be 85 and 87%. So there is no effect as such on the operating rate because of the rationalization of some high-cost assets. And this is not new. In North America, when we built Alphabet, 2 assets got rationalized. I'm talking of 7 years back. When we built Invista, shut down 2 plants. Now here, the people who are building the plant, M&G and DAC, who has a capacity reservation, they themselves have very high-cost assets. So that is the whole, and DAC also shut down 1 Cap-Fair plant. So rationalization will help, and this will also keep the industry utilization rate good. In PET, you need to understand that 85-87% is a very good capacity utilization, because in the summer, you need more PET. In the northern hemisphere, as you know, the summer, the drinking of water, so the PET is a little bit seasonal business. And actually, if you are having annual 88-89%, you are actually running 100% in the second quarter. So we don't see any impact. All the margins factored, the drop in the margin has already been factored, and actually has been come into the last 2-3 years. So we don't see PET North America, there will be any impact of M&G, as the capacity utilization will remain strong. Let's look at PTA. PTA, again, 1.2 million tons, new PTA plant getting built. You have increased demand, as I just said, from PET and the fiber conversion. There will be a new demand coming up on this. And if you see, there is a exports from Mexico, just right on the top left corner, 416,000 tons of PTA, which will actually, because Mexico has a free trade agreement with Latin American countries, and also we have with Europe. So that export will be possible. And if you see, after factoring in all those factors, and the industry utilization is still very healthy on PTA side, 90%, which is a very strong. So increased demand of PTA due to PET and fiber, increased exports, some rationalization will keep the industry utilization high. So PTA margins will also not get affected. Another important point to understand in PTA in North America is that we are 3 players who control 90% of the North American PET and fiber business. We all will be integrated. So M&G will have his own PTA, DAC has his own PTA, and I have my own PTA. So who is the merchant player who has to sell PTA? Is BP, 1.3 million tons. So when we sell our end product, we sell the entire chain. When I sell PET, I'm selling my ethylene, I'm selling my MEG, I'm selling ethane to PET. And similarly, paraxylene to PET. So so only, even if lower utilization will happen, will affect BP, who is a merchant player, and there are only 1 customer of PET which remains is Nanya. There are basically 3 control 90%, and Nanya is another player, so who remains as a buyer. And there are some film customers where we also have a position. So industry will restructure, and we don't see any impact on the margin. IVL have a unique position of integration with paraxylene and also a good cost structure. You know, even in Montreal, as you know, we are located next door to a Parachem with Suncor, which makes the PX. So PX has got cost competitively. So since there were some questions on North America, we added this North American slides. What else we are doing other than second quarter results, which had Sepsis Spain, which had also the Decatur acquisition. The 2 projects, India. India is a very attractive market today. Indian PET consumption is only 800,000 tons, versus in China 4 million tons, 4.2 million tons. So Indian per capita consumption of PET is only 0.5 or 0.6 kilos versus 4 kilos and in developed world it is 7 kilos, like when you talk of 8 kilos in North America. So India, there is no stoppage. This will continue to grow in double digits, more than double digit. If they have to catch up the China, probably the growth rate required is 16%. Now why PET? So PET substitutes glass. Still a lot of CSD is sold in glass. It is by water and the middle income, as we said. So in India, this is going to continuously grow. So what we did in India, we first acquired Micropet, which was a state-of-art new technology plant at a cheaper than built cost. from one of the players who went in after 2011 making shoes, assuming that PET is a very good, easy walk. So he ended up selling this asset to us. Then Dhanshri, who is an established player for last so many years, we thought that industry consolidation is good, so we entered into a 50-50 joint venture for both the assets, from Micropet as well as Dhanshri. And if you look on this graph, India is a very large country. Our plant is, Panipat is Micropet, is situated in north, and then there is a next door PTA and MEG producer, which is Indian Oil Corporation. It's like PTT of Thailand. It's Indian Oil is the largest company. So you get cost competitively PTA and MEG. And Haldia, Dhanshri is situated on eastern India, which is 480,000 ton plant. Again, PTA is co-located by Mitsubishi. And our largest competitor is Reliance, which is on the western. And to bring the product from west to east and west to north, it costs you $40. So eachbody will have their own catchment area, and it's a consolidation of the industry. So you got a footprint in India, being the second largest player, in right place assets, and established brand name which they have in India of Osped. So this JV will get completed by September, and you will see this as an equity earning, not as a consolidation, because we are a 50-50 JV partner. But the management will be with us. The other plant projection, which is PTA expansion, where we are increasing the capacity of PTA in Rotterdam by 330. Actually, it will be about 350. This is expected to be complete in first half. Now, this is captive consumption. Basically, we are replacing what we are purchasing at present from Korea and what purchasing from other suppliers. So it is no marketing risk. It's just replacing what we are buying, and it will become a very, very cost-efficient asset, and it will significantly contribute to the EBITDA, and our captive integration will increase to 75%. And if the anti-dumping duties, which are being initiated against Korea, comes in, then you can see that the PTA margins in Europe will further improve. And with Brexit, I don't know, the euro is still hovering around 1.1, GBP became 1.3, but if euro further weakens, all our European assets will be highly cost competitive. So this too, the JV India will start coming in fourth quarter as earning, PT expansion Rotterdam in the early 17. The other is the gas cracker. I talked to you about this gas cracker, very excited because with the shale gas, many people went in North America to invest into greenfield. We evaluated a lot between greenfield and shutdown asset. We thought that the greenfield there's a lot of money required. If you put a 1.5 million tons of cracker, it requires $3.8 billion, $2,500 per ton. And then you put another glycol plant with $5 to $6 billion. Those who are following PTTGC must be hearing about that they're looking at Marcellus and what sort of project costs they are talking about. So we went into a very smart move. We bought a shutdown asset which is being restarted. It's being debottlenecked. Its capacity will be 400,000 tons. It's expected to be completed by fourth quarter of 17. So I will get upstream integrated in propylene and ethylene. Its major is ethylene, which I'm purchasing right now. So I get both capture value. Ethane is going to be long in North America because there is a lot of ethane available. Those who are following crude oil and rigs, as soon as the crude oil jumps to $50 a barrel, many oil rigs are starting. There's always in Bangkok Post, I think, Thai oil commentary where they keep telling you how many rigs are running. So this is what's very interesting, and it will have we believe an EBITDA, even if today's basis, an excess when the crude oil is low, excess of $100 million. The other strategic move which we are doing is expansion of tire cord. Having acquired this asset in Kaiping, which is China, we thought that we should expand by 50%. So 17 KTA, this brownfield expansion, this will happen by first quarter of 18. And we already have a customer base. The approval process will be quick. And this will give us an opportunity to further enhance our footprint in HVA, particularly in tire cord field. So what does it mean? we made you a presentation a number of times of our 2018 business plan. Today, we are very proud that we have executed all of it. From 6.25 million tons, it goes to 10.7 million tons. And that gives you a breakup of how PET, fibers, olefins, and aromatics are there. Aromatics is a significant piece here. This 10.7 will include 4.3 million tons of PET, then you have fiber, and then you have aromatics. And geographically, you can see how diversified North America, Europe, and Asia. So all these are committed, and it is done thing. So it's just a matter of time when they are, the cracker starts up and we have the joint venture eventually done. So this production bridge, 9.3 million. So second quarter, if you annualize, means you multiply by 4, equivalent we produce 9.3. Over next 2 years, operating rate will impact of 0.7 million tons. And the announced capexes, which are basically Rotterdam, will add up 0.7 million tons, so we'll achieve 10.7 million tons. So once the cracker starts, the Rotterdam expansion starts, and Dhanshri gets consolidated, is 10.7 million. So Richard is reminding me only 7 minutes left. So okay, so $873 million is the annualized EBITDA, and then you add up all these impacts, becomes $1 billion, and the synergy. We're not giving you the numbers. So we are on a good track in a tough period to achieve a better earning per share going forward. We always talk core, we don't talk reported, which includes negative goodwill. This is an EBITDA bridge per ton basis, that how $93 we achieve, which gives you segment-wise PET, fibers, olefins, how it will change with the operating impact. Our cost will come down, and that's why EBITDA will improve, and the product mix will change to 104. And then with new expansion, we're talking of further improvement. So I think IVL is on a great track to achieve its result. We are very excited about our second quarter results, which has come, and our thrive will be to how to keep those sustainable earnings. And with all the moves which we have taken, have been a very good strategic fit. So thank you very much, and this is the last slide which we keep showing you, but I think Richard wanted to leave good time for question answers, so please go ahead and ask your questions.
Thanks. So if anyone has a question, you can ask in English or Thai, and we will try our best to answer. There is no questions online at the moment, so ถ้ามีคำถามอะไรบ้างนะครับก็ถามได้ Yes, Mr. Duga.
I would like to. Can I have a mic?
I don't think there is. Oh, there's one there. Yeah.
Most respected Mr.
Oh, it's not on.
Most respected Mr. D.K. Agrawalji and Mr. Jalan, Mr. Richard, I would like to appreciate your ranking first in Thailand in case of transparency, even higher than PTT, only Fortune 500 company. I highly admire to the good contribution, good dynamic leadership shown by Mr. Alok Lohia and Mr. Sri Prakasi Lohia and D.K. Agrawalji. I have one question. You are having in a good spree of takeover M&A, and results are also very, very good, core profits, and especially EPS growth investors looking is on the very higher side. Would like to know that how you sustain that growth in the coming quarter. That is the one question. Second is the free cash flow. When you invest, would you retain the free cash flow? You say that you will be issuing the warrants and debt equity ratio will be coming down. I also like to appreciate that you have internal accruals in the higher speed, higher growth line. This will help you to maintain lower debt equity ratio, and you will become a self-finance company in future, I expect and wish. Thank you very much.
Thank you for the questions.
So thank you, Mr. Dugar, first for congratulating on the transparency, and we are very proud that we have a very high degree of corporate governance, and we are very transparent in our information, as you can see our MD&A. Particularly on the sustainability of the earning, as we explained, it's a trough of the market. We are very confident. We are working on many HVA products in the fiber segment. The IPA, metaxylene is actually not factored into this. So there are a lot of moves which we are doing. The margins are already at trough, so sustainability of earning will be maintained. That's what we believe. Of course, there can be always an external factor. You know that China is not doing great at present. China has slowed down. The demand in China is not that great today. It affects the worldwide demand. On the warrant exercise, naturally, as we announced that we will not be doing many acquisitions now. We don't have anything on card because we just want to consolidate all the existing acquisitions so that we can take the maximum synergy benefits from all these acquisitions. And when those synergy benefits are taken, which reduces the cost, and our debt, which is, gross debt is about $3 billion, we want to reduce the debt also. If warrants get exercised, which will only happen by 17th third quarter, right? The first tranche, correct?
It is expiring.
Before that, naturally, it will boost our debt equity. It will bring down below 1. And as Jalan showed you, that actually, as a matter of fact, if based on our cash flows, we can even go. The blue is the impact of warrant issues, and the green is from internal cash flows. So how it can quickly deleverage. An EBITDA over debt of 3 times, I mean, if you analyze 900 million and 3 billion, 3.5 is not very high. And particularly, you know, the major part of the EBITDA, the debt is also a working capital debt. So, but right now, we want to consolidate. We want to give a pause. We have already given you the capex programs, that what we are doing. As you can see, 15 billion in 17 and 7 billion in 8. So we don't have any strong acquisition. But IVL will aspire to remain a growth company. You want to ask Komsan?
One small suggestion. Debt equity ratio you are using, you are having A+ credit rating. I would suggest, can you use net debt equity ratio? This will show your improved position.
Okay. This is net actually.
Well, it's net operating.
The operating net. Yeah.
Okay.
Komsan wanted to ask.
I was expecting that.
Okay, so that's a good question. First thing is not due to SEPSA PET, because SEPSA PET is very, very normal. We got a better results, of course, PET. Second quarter is normally very seasonal. Good demand of PET. We are seeing a slowdown in investments. That's why the EBITDA, and measure of this is also due to cost reduction. When you look at EBITDA, it's not only margins. There are EBITDA per ton. Energy prices in Thailand have come down. In China has come down. In Europe, energy is 4 euro cents per kilowatt. Actually, I've covered 2017 energy at 4 euro cents. Now you can imagine 4 euro cents in baht terms is only 1 baht 50. So all these operation excellence. So it's a combination of domestic sales increasing, our packaging business increasing. So we believe that it should be around those numbers. Of course, we always there will be some quarter-to-quarter fluctuations. But I think PET has still a very overhang of the capacity. World capacity utilization is 75%. And remember this G20. G20 is going to have a severe impact because those who have researched, a lot of capacity in China is going to shut down for a period of time. And actually, as I was saying, that in third quarter it will have impact. A lot of polyester plants in that region will shut down. PTA plant will shut down for environmental reasons. So it will just have a temporary blip. But PET built up outside China, there is no plant getting built now. So we had a huge surplus. Reliance built up 700,000 tons, and there is no plant getting built. And that MNG we talked, except the MNG. And it takes 2 years to build a plant, 2 to 3. And I don't see any new player coming in after so many players got burnt. So I think hopefully that answers. The Western feedstock, as you can see, dropped from $199 to $99 per ton. Now this is a combination of few factors. One is the glycol impact, because glycol was shut down, did not run in a suboptimal manner. Then the mix has changed, because there's a lot of PTA added where we don't have the same EBITDA per ton. So that's why this dropped from 199 to $99 per ton. Asia, you have seen slight improvement, 22 to 34, but that's more because of cost, better energy prices, coal prices are lower, which we have our own power plant. So overall, there has been an improvement everywhere. But when you, and specialty, you ask HVA, we increase the recycling, we have included some specialty, but that's a small contribution. A lot is to do with the, basically our better cost controls and slightly better margins in North America. Cost structures came down, slight improvement in the margin. I don't know, this report which just came in, we are also thinking that when they say that there's a lot of rationalization happening in Korea because many PTA plants getting shut down. In China, you know, Xianglu never started, Dragon never started, so that plant is off. But still the margins are not great because there's an overhang of the capacity. So it's a very marginal improvement. So there can be, in 2017, Korea has decided that they want to run lower capacities, 60 to 70%. Taiwan has already shut down Tuntex plant. China, there are a lot of shutdown of the smaller plants. No capacity getting built. Reliance built very large capacity, 2.4 million tons. That has already started. So there is no plant coming there. So I think the overall you are in a shape in the industry that next year, because there's no reinvestment. I mean, what today margins are there, you invest $600 per ton to build a PTA plant and you get hardly any return. So you're not positive cash. So banks don't fund now. So banks are getting stricter. So it will be a, hopefully tons. So what IVL has is the volume, 10.7 million tons of volume. And if there is an improvement, slight improvement in the margin, that gets translated in the bottom line when it is not at reinvestment level. So there is no G20 impact on us because our plant is in South China, but we are seeing a good demand in China of PET because all the brand owners are asking pre-buying. So we are actually, our domestic sales in China has increased. And people are still saying that there may be imports of polymer, but we are not factoring into that, you know. Second quarter is the seasonal, actually, the peak. Third quarter is normally weak, particularly because of the, you know, rain and all that. Any more questions?
Well, time is up. Oh, yes, sure.
Regarding
Time is up.
Okay, okay. US Sustainability Index, your name will be included, we hope.
We are working very hard on Dow Jones Sustainability Index. We just actually reviewed yesterday in the sustainability meeting, and board is very focused on that. Thank you very much. I'm sorry time is up, but there are always questions Vikas can answer you, and Richard can answer.
There's somebody asking very late. Oh, okay, just before we go, because there's somebody...
the questions are one, do you have a plan to acquire additional capacity in the next 1 to 2 years? Well, 1 to 2 years, who knows what happens. But 1 year at least, we don't acquire any capacity. We are doing Dhanshri acquisition, which is 700,000 tons, and which will get joint venture. And show the trend of PTA, I don't understand in next 3 years again.
Again,
sorry, you will maybe... You can
have misunderstanding.
Okay. If it is a trend of margins, and I think if this is the margin they are talking, then this is the trend for last 3 years. But we believe it's the bottom of the cycle. So let's see where things keep improving.
Yeah.
Thank you. It's different than olefin. Olefin where you have peak of the earning. Yeah. Thank you very much.
If the person online wants to write an email with this question, I'll try to figure out together what it means.
Okay.
So I'm not sure what he means, but we can figure it out. Okay. Thank you very much, ladies and gentlemen. Have a good day.
Thank you very much.